Hello, everyone. Welcome to the market opening bell on Wednesday, April 16. The market is closely watching developments in US tariffs and China's first quarter economic data to be released today. Hong Kong stocks showed mixed performance on Tuesday. The Hang Seng Index opened 186 points higher at 21,604, which was also today's high. However, gains later narrowed and the index briefly fell 119 points to a low of 21,298. It closed up 49 points or 0.2% at 21,466, marking its sixth consecutive day of gains, cumulative rise of 1,637 points or 8.3%. The Hang Seng China Enterprises Index rose 17 points or 0.2% to 7,983, while the Hang Seng Tech Index fell 33 points or 0.7% to 4,982. Total market turnover shrank to 185 billion Hong Kong dollars. Southbound funds recorded a net inflow of 7.203 billion Hong Kong dollars into Hong Kong stocks, with net purchases of tracker fund 791 million Hong Kong dollars, Tencent Holdings 747 million Hong Kong dollars, Meituan 523 million Hong Kong dollars, and China Mobile 403 million Hong Kong dollars. Net sales included SMIC 792 million Hong Kong dollars, Xiaomi 520 million, and Alibaba 218 million. Mainland Chinese markets were soft, with trading volume continuing to contract. The Shanghai Composite Index dipped to a low of 3,246 and closed at 3,267, up 5 points or 0.15%. The Shenzhen Component Index fell to a low of 9,804 and closed at 9,858, down 26 points or 0.3%. Combined turnover in Shanghai and Shenzhen was 1.077 trillion yuan, down 203 billion yuan from the previous day. The renminbi central parity rate was set at 7.2096 against the US dollar, up 14 pips from the previous day's close. Technical analysis, the Hang Seng Index hit a high of 21,604, slightly surpassing our first rebound target of 21,580 and closed above the 10-day moving average at 21,385. However, a bearish hammer candlestick formed on the daily chart, coupled with shrinking turnover, indicating weakening upward momentum. The index may turn volatile in the short term and might struggle to hold above the 10-day and 100-day moving averages. If the 100-day moving average is lost, the next support level is at 21,000. Market highlights: gaming stocks underperformed, with Galaxy Entertainment sliding 3.6% to 27 Hong Kong dollars, and Sands China dropping 1.9%. Macau's first quarter gaming revenue grew 0.6% year on year to Macanese Spectacle, 56.7 billion, only 75% of 2019's first quarter level. Despite the 10% year-on-year increase in visitor numbers to 6.7 million in the first 2 months, which is 97% of 2019 levels, gaming revenue growth has slowed. Amid escalating US-China trade tensions and challenges to Chinese consumer confidence coupled with a weakening renminbi, Macau's gaming revenue growth is expected to remain subdued this year. US stock market fluctuates. The Dow Jones Industrial Average closed 155 points or 0.4% lower at 40,368. The Nasdaq Composite held steady, dipping just 8 points to close at 16,823, while the S&P 500 fell 9 points or 0.2%. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, ended down 0.49%, with Alibaba dropping 1.48% and ICE surging 6.71%. Investor focus on the latest corporate earnings. Bank of America and Citigroup both reported first quarter revenues exceeding expectations, with their stocks finishing nearly 4% and 2% rising nearly 4% and 2% respectively. Bank of America's first quarter net profit grew 10.4% year-on-year to 7.4 billion US dollars, with earnings per share of 90 cents, surpassing the expected 82 cents. Revenue increased 5.9% to $27.51 billion, also beating forecasts. Net interest income rose 3% to $14.6 billion, slightly above the expected $14.56 billion. Equity trading revenue jumped 17% to $2.2 billion, and fixed income revenue grew 5% to $3.5 billion, both exceeding expectations. Citigroup's first quarter profit rose 21% year-on-year to $4.1 billion, with earnings per share of $1.96, topping the expected $1.85. Revenue grew 3% to $21.6 billion, above the anticipated $21.29 billion. Strong activity in currency and government bond markets drove an 8% increase in fixed income revenue to $4.5 billion, beating the expected $4.33 billion. Benefiting from heightened market volatility and increased client activity, equity trading revenue rose 23% to $1.5 billion, surpassing the expected $1.4 billion. Netflix, set to release earnings this week, announced a goal of reaching a $1 trillion market cap by 2030, aiming to double the revenue from last year's $39 billion. The company targets $9 billion in global advertising sales by 2030. As of the end of last year, Netflix had nearly 302 million global subscribers, with projections to reach about 410 million by 2030. Major tech stocks generally declined. Meta fell nearly 2% amid a U.S. antitrust investigation, while Alphabet and Amazon dropped over 1%. Tesla gained less than 1%. Nvidia recently announced a $500 billion investment in AI infrastructure in the U.S., expected to create hundreds of thousands of jobs and drive trillions in economic impact over decades. President Trump stated that all necessary permits would be expedited for Nvidia and pledged to fast-track permits for companies contributing to America's golden age. AMD revealed that some of its data center CPUs will be produced at TSMC's Arizona factory, marking AMD's first US-made products. AMD also noted that its next-generation EPYC processors are the first high-performance computing products manufactured using TSMC's 2-nanometer process. Economic data: manufacturing activity in New York State likely declined in April. The manufacturing index improved from -20 in March to -8.1 in April, better than the forecasted -14.5. Oil price update: following OPEC's downgrade of global oil demand forecast for this year next, the International Energy Agency (IEA) also lowered its 2025 global oil demand growth forecast by 300,000 barrels per day to 730,000 barrels per day. In its first detailed assessment for 2026, the IEA predicted continued supply surpluses. The agency noted that due to a fragile macroeconomic environment and the rising adoption of electric vehicles, oil consumption growth in 2026 will slow further to 690,000 barrels per day. Our stock pick today is Modern Dental, stock code 3600. Modern Dental has been actively implementing multi-dimensional strategies to capture market opportunities, increase market share, and boost sales. It has become a pioneer in providing comprehensive digital solutions covering minimally invasive and cosmetic dental prosthetics, intraoral scanners, and clear aligners. Following the acquisition of Thailand's largest dental laboratory, Hexacream, in January 2025, the group has further strengthened its comprehensive product portfolio and market coverage, enabling it to outperform domestic and international competitors. Amid uncertainties surrounding U.S. government tariff policies, the group holds a clear advantage with its onshore production capabilities in the U.S. through microdental, which helps mitigate tariff-related risks. For the year ended December 31st, 2024, the group recorded revenue of 3.364 billion Hong Kong dollars, a 6.1% increase from 2023. By region, Europe saw a 16.1% revenue growth to 1.618 billion Hong Kong dollars, accounting for 48.1% of total revenue, driven by new product launches, example digital prosthetics and advanced digital processes that boosted sales order volumes. North America, excluding microdental, grew by 8.7%, while mainland China, Australia, and other markets also recorded growth, reflecting the group's competitiveness in a challenging macroeconomic environment. Even in tough economic cycles, the dental industry demonstrates strong resilience and stability. This stability is further highlighted by irreversible demographic trends such as population aging and increasing awareness of oral health, which continue to drive demand for prosthetics. Meanwhile, digitalization is fueling consolidation in the prosthetics industry, and the group is at the forefront of this transformation with its centralized digital workflows, advanced production capabilities, and global network. It's well positioned to gain a larger market share in industry's consolidation. For January 2025 acquisition of Hexa Cream further diversifies the group's global distribution and sales network, strengthening its influence in Southeast Asia. Recommendation: buy at 4.15 Hong Kong dollars with a first target of $4.4 and a second target of $4.5. Stop loss at $3.95. I do not hold the above stock.